If you're an automotive supplier and you know your team is building the next big thing, prove it on the industry's biggest innovation stage. Automotive News is now accepting applications for the 2026 PACE program. PACE Awards recognize traditional and non-traditional suppliers worldwide for new product, process, and business model innovation, and entries must be innovations already commercialized through a sale to an automaker. Still pre-commercial but past the pilot stage? PACE Pilot recognizes post-pilot, pre-commercial innovations across automotive and future mobility, products, software, IT systems, and processes with the potential to revolutionize an automaker's business. All submissions are reviewed by an independent panel of judges, and MEMA is the exclusive lead sponsor. Ready to be recognized? Apply by February 9th at autonews.com.
Welcome to Daily Drive for Friday, January 16th, 2026. I'm Kellen Walker in Las Vegas. Today on the show, Canada strikes a landmark deal allowing Chinese EVs into its market. Ford explores battery deals with China's BYD, triggering political backlash. And U.S. EV registrations plunge 49% after tax credits end. Plus, Polly's Chris Press explains how integrating auto insurance into the car buying process is helping dealerships close deals.
We look at insurance as the second lever to pull in order to save the customer money so they can fit the car they want.
Let's run through all the news you need to know to keep up in the auto industry. Canadian Prime Minister Mark Carney has announced a landmark agreement with Beijing, allowing Chinese electric vehicles into Canada's market. In exchange, China will drop duties on canola and other agricultural products. The deal permits up to 49,000 Chinese EVs annually at a 6.1% tariff, about 3% of Canada's market. In return, China will reduce canola seed duties to 15% by March and lift tariffs on Canadian lobster, crab, and peas. The agreement marks a significant shift after Ottawa imposed 100% tariffs on Chinese EVs in 2024 to protect domestic automakers. More on this story in a minute with Automotive News Canada's Greg Layson. Meanwhile, Ford is exploring battery deals with China's BYD for its international hybrid production. The talks involve supplying Ford's overseas factories with batteries for the automaker's expanding hybrid lineup. Those overseas hybrids would be exported worldwide, including to the U.S., though most American-sold hybrids will still come from North American factories. The discussions triggered immediate political backlash from White House trade advisor Peter Navarro and House China panel chair John Molinar, who said Ford, quote, should work with our allies, not our adversaries. Ford already sources batteries from BYD for its Chinese joint venture factories and has a separate deal with China's CATL. There's no guarantee an agreement will actually happen. And U.S. electric vehicle registrations dropped 49% in November. That's after federal tax credits ended in September. EV market share fell just under 5%, down nearly 4 percentage points from a year earlier. Legacy automakers took the hardest hit. Chevrolet saw registrations plunge 75%, Honda fell 85%, and Nissan dropped 94%. Tesla fared better with a 35% decline, actually growing its market share to over 53%. Some analysts predict the EV market will rebound this year with more affordable models launching. Others say we won't see EV share climb above 6% for the next 2 years. And those are today's headlines. You can find more details on all those stories at autonews.com. Joining me now to help us understand Canada's deal with Beijing to allow Chinese-made EVs is Greg Layson, the digital and mobile editor of Automotive News Canada and host of the Automotive News Canada podcast. Greg, welcome back to Daily Drive.
Good to be here.
Greg, this deal comes after Canada imposed those steep tariffs just 2 years ago to protect its auto sector. What's driving this dramatic policy shift now?
What's happened is a full-on trade war with China. Yes, everyone knows we're engaged in one with the United States, but when we enacted those 106.1% tariffs on Chinese EVs, China then enacted tariffs on our canola industry, some seafood, other agri products, and the farmers in the West started bending the ear of Prime Minister Mark Carney, saying how much they were hurting. And then it became a delicate dance for Prime Minister Mark Carney to figure out, how do I keep everybody happy? And so a lot of pressure from the West to lower the canola tariffs in China, a lot of pressure from the auto industry to keep the tariffs on Chinese EVs in place. This is the compromise. 49,000 units per year allowed into Canada at a tariff rate of 6.1%. It's capped, and China has said, or at least Mark Carney says China is expected to drop their tariffs on canola down to 15%. So this is the compromise, but I say it like this. Is it really a win? Because it's just less losing. There's still a tariff on canola, and now we have Chinese EVs entering the North American market. So I don't know if this is a win for both industries or a loss for both industries, because a year and a half ago, EVs weren't allowed in Canada at all other than 100% tariff, and there were no tariffs on canola. That's completely changed, even with this deal.
With Canada now opening its doors to Chinese EVs, what does this signal about the possibility of Chinese automakers eventually entering the U.S. market?
So there's some very vague language put out there by our federal government that says it expects this could trigger some North American EV production by Chinese brands. It's not set in stone. It's not a definitive deal, but it could mean eventual production, could mean eventual battery production in Canada, based on the sources I've spoken to all day, that maybe because we have critical minerals and we have refining facilities and we already have battery factories here, that we're a good fit for a Chinese battery maker here. And then couple that with Donald Trump's comments earlier this week that he's open to Chinese EV assembly in the United States. Suddenly you have an EV supply chain that really looks a lot like the North American EV supply chain. So there's a possibility of jobs, but this is so far down the road. I mean, even the Chinese EVs themselves won't be arriving until next year at the earliest. What you might see early on is Tesla and maybe Polestar capitalize on the 6.1 tariff that they will pay, because they had previously been importing from China to Canada. They'll probably be the first two automakers to take advantage of that, make vehicles in China cheaply and send them to Canada. And then the Chinese brands arrive in a year, year and a half.
Perfect. Greg, thank you so much for joining me.
Anytime.
You can read more about that and all of today's top news stories at autonews.com. Coming up next, Polly's Chris Press explains how integrating auto insurance into the car buying process is gaining popularity at dealerships, and why it's becoming a crucial tool to help customers afford the vehicles they want. That's next on Daily Drive.
Artificial intelligence dominated CES 2026. But is the industry's pivot away from EVs putting the U.S. at risk?
This slowdown in the U.S. and this pivot to hybrid and other powertrains, my concern is how far will we fall behind and how difficult will it be for us to catch up, or can we catch up?
On this week's episode of the Automotive News Shift podcast, EY's George Lenyo joins the show. He talks about why U.S. automakers skipped big displays this year, the shift from EV hype to AI and robotics, and his concern that the U.S. is falling behind China in electrification. I'm Molly Boygon. Join me on Shift, available this Sunday wherever you get your podcasts.
Welcome back to Daily Drive. I'm Kellen Walker. Auto insurance has become the second highest cost when purchasing a new vehicle, and dealerships are increasingly integrating it into the sales process. Chris Press is Vice President of Automotive Distribution at Poly. He spoke with Automotive News Senior Retail Editor Dan Shine about how insurance integration is evolving and why it's particularly important for younger buyers and affordability-conscious consumers.
Chris, appreciate you joining me on the F&I Friday edition of Daily Drive.
Thank you for having me.
So back in the old days when I was younger and I buy my first car and my second car, bringing your own auto insurance was kind of part of the deal. It's like, you handle the auto insurance and it's not part of the car buying process. But it's become more so now that it's kind of evolved over time. Kind of give us a little bit of that history and how it's kind of changed from the old days of, you're responsible for your car insurance to now where it can be part of, the process when you go into a dealership to buy a car.
Yeah, and that's a great point. It has changed in the past. Many states allow a person to add their new car to their policy post purchasing the car, and that's still the case. However, many dealerships nowadays they want the new car with all of the correct coverages to be on the policy at the point of purchase. The reason is there's just been bad experiences as far as customers having accidents and not having full coverage, or in some cases, fraud situation where having the correct insurance verifies who the buyer is and protects the dealership as well. So many dealerships are now asking customers to have the full end-to-end insurance covered prior to leaving the dealership, which is one opened up opportunity for that type of service to be offered. But also you have a lot of customers that are youthful drivers that don't have insurance or don't know where to get insurance. And we're also seeing a lot of, new to the U.S. buyers that have foreign driver's license and other challenges that really need someone that has insurance experience to be able to assist them.
We kind of mentioned younger buyers, and this is kind of part of the way they kind of operate now too. It's they don't do things the old way. It's now they're, so that kind of factors in, I would guess, as well into how dealerships are now kind of handling this as insurance as part of the whole sales process.
Yeah, agreed. The insurance industry has adjusted. A lot of times there was the friend or the family friend that they would have insurance through a broker. But nowadays, a lot of the carriers work directly with their customers. And, you can imagine that youthful drivers, people under 25, they don't always know the best place to go to get the correct insurance. So just providing general guidance on we have a trusted partner or we have someone that can help you with this is a huge value add for the dealership in creating an excellent customer experience.
Yeah, I think if that hurdle is out of the way, especially for young drivers who maybe don't have insurance or this is the first time, to be able to kind of supply that I would think smooth over that that whole transaction process. I mean, it's already a lot of paperwork and a lot of hassle. To take one little hurdle out, I think also would be a good selling point.
Yeah, that's exactly right. The experience is much better. Puts the customer's mind at ease. Obviously, finances in today's day and age with increasing inflation and those factors has caused a lot of pressure on the consumer. So either giving customers a good option or being able to use insurance as a lever to help them save money so they can afford the car they want is a huge advantage for our dealerships.
Yeah, you kind of touch on affordability. It seemed like in 2025, this was a big issue. I think it's going to continue to be a big issue. Everything's a little bit more expensive. So the bills, are adding up, taking money away from potential car payments. And it just seems that people are kind of on the sidelines a lot in 2025 because of the high sticker prices, because of interest rates maybe a little bit high. But also insurance is gone up too. It's going to be very expensive. And so, again, this is probably another hurdle that consumers are facing.
Well, absolutely. Insurance is the second highest cost when it comes to purchasing a new car. I think the latest data out is that the average new car purchase is about $50,000. Interest rates have come down slightly over the last couple of months, but still are higher than what I think many consumers have been used to over the last 5 years. And so the dealership has to find a way to make sure the car fits into their budget. And there's only so many things you can do. You can try to extend the length of a loan in order to help them afford it. You can try to help them lower the interest rates, but that's very limited. And so what we look at insurance is the second lever to pull in order to save the customer money so they can fit the car they want. You really, as a car dealership, don't want to reduce the trim or downsell them to a different car to save money. You want to get them to what they want, what they came to the store for. So insurance just gives our dealerships an extra option in order to make the car payment fit.
Right. It's people, they see a car, they fall in love with it, with whatever features they have, and they don't want to start taking away the heated seats and the heated steering wheel. If they can find another way, and kind of searching through different insurance options, that might help them, keep the level that they want.
That's exactly right. Yep. And if you want to talk about the cost of insurance, so yeah, the cost of insurance has risen significantly over the last few years. That's simply because the inflation rate has been high. The cost of accidents and repairs has gone up, whether because of the inflation or because of EVs, electric vehicles, being more expensive to fix. And so what we've seen is that insurance has gotten to a very high level. Now, luckily, the last few quarters, you'll see that the rates have taken a little bit of a step back, which is great, giving customers a little bit of breathing room. However, overall, it is much higher than it was even just a few years ago. And that's something that customers have to take into consideration when purchasing their car.
Yeah, you kind of lead me into my next question. Poly did a kind of their Q3 report on the insurance and all, and the automotives, and it kind of mentioned that the friction, that insurance friction, kind of lessened in Q3. What were some of the factors why that happened?
Yeah, majority of it is price. So with price taking a step back and stabilizing, that's been incredibly helpful for customers. But the other aspect is the carriers have caught up with their pricing. So when inflation was going significantly higher, carriers have the ability to raise prices. They're very limited in being able to do that. So, for example, they have to go to the Department of Insurance. They have to get that approved. It can take time. So during that period of time, they're losing money, and they typically have to reduce their underwriting criteria, meaning not offering insurance as much to customers, or putting in restrictions such as we'll only offer insurance to customers if you put your home and your auto with us. And so now that the carriers are mostly caught up, what we're seeing is not only has the price stabilized, but the carriers are more willing to offer insurance to all customers, which has really lessened the pressure on the insurance industry and new car buyers in particular.
And in that same Q3 report from Poly, it talked about a 50% growth or increase in the number of customers who took kind of that high collision deductible. Kind of interesting. Talk a little bit about how that kind of growth from, I can't remember the number from where it was, but and just kind of the reasoning again behind that.
Yeah, absolutely. So one, changing your deductible from $500 to $1,000 can save you about 10% on your insurance. So that's a great, easy way to help customers find a more affordable premium. The other thing is customers are becoming more insurance aware, to where they say, hey, at what level would I actually submit a claim? So for example, if you had an $800 claim or an $800 incident, would you submit a claim for $800? Many customers nowadays say, no, I wouldn't, because I know that it's going to go on my driving record. It's going to be, it's going to affect my premium going forward. I'll just pay the $800 out of pocket. So therefore, they assess where they feel comfortable paying out of pocket versus needing insurance. And many of your customers are landing on $1,000 deductible as that number. In addition, the carriers are also recommending to their customers to move from $500 to $1,000 for the same reason. It's more affordable. They don't want small claims either. So really, it benefits both the customers and the carriers. And I think that's why you're seeing a strong move in higher deductibles.
Great stuff, Chris. Really interesting. Great talking with you. Really appreciate your time.
Yeah, great. Thank you, Dan. Appreciate it.
Chris Press is Vice President of Automotive Distribution at Poly. He spoke with our own Dan Shine. That's Daily Drive for today. I'm Kellen Walker. Thanks to Automotive News executive producer Jake Neer, as well as our own Lawrence Iliff for his reporting for today's podcast. You can get the latest news on Canada's deal with China, Ford's battery negotiations, and everything happening in the auto industry at autonews.com. Come back tomorrow for our Weekend Drive episode, where Larry Velaquette and Michael Martinez will break down President Trump's combative Detroit visit, Stellantis dumping all of its plug-in hybrids, and more of the week's biggest news stories.
Larry, I gotta say, I just wish there was some way that Ford could have possibly known that getting involved with Donald Trump might lead to some drama.
We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.